Hey everybody, Courtney Smith here, and I think it's a Friday, time for me to bum you out. So let's get right into it. So what I have here is I'm going to do a bit of a dive into the S&P. So what we have here, and I'm going to go through in detail, so this video will take a little bit longer than normal. So this is the S&P. So let's use that as a proxy for the stock market. So we're going to go through and look at every factor I have on my sheet here. This is kind of my standard charting on stockcharts.com. I also use ProRealTime for charting. I also use barchart.com for charting. But stock charts is one I use a lot. All right. So let's take a look. Market rallies up, makes a high. This is back at the end of, or actually beginning of September-ish. The market then sells off, normal correction, no big deal, rallies up, but fails to make a new high. Now we've traded off. So we've now gone basically 2 months without making a new high. Is that a bull market? No, that's that's 2 months without a new high. That's not a bull market. Okay, maybe I'm belaboring the obvious there. But when we go up and rally up and get close to a previous high, and then we fail and break this low that's in between the two highs, this low right here, if we break it, and we're very close to breaking it, that's called a failure top. Now, what you look for is you also need a decline in volume, and we've had roughly a decline in volume until the last few days. So for it to be a valid chart formation, you need a decline in volume, which we've got. The last couple of days, you can see we've started to increase in volume. One final thing to look at in the relationship of price to volume is if it breaks this low, you would want an increase in volume on the breakout. Looks like that would happen if we get the breakout. So let's keep looking. Gap down, gap down. Now the gap did not occur on high volume, which means it's not as strong a gap as you would expect, but nonetheless we have to respect it because it's saying that there was no buyers in the market. That's how a gap is created. So now we're starting to come down. So is this going to be a legitimate breakdown? Could be. That's why I'm saying we're teetering on a knife edge with this market. And oh, by the way, something might happen early next week that might cause it to either pop up or break these lows. Okay? The next thing we need to look at here is the purple predictor. This is on balance volume. And right now, the on balance volume is breaking down very little, even though the price of the market is breaking down a lot. What this means is that the smart money is using this dip to add to their positions. They're bullish. The smart money is bullish. Well, I much prefer to be on the side of the smart money than on the dumb money, all right? Now, what that would suggest is that this is going to see a pop. Now, generally speaking, I think that if Biden is elected, that's bearish for the market. If Trump is elected, that's bullish. Let me explain. The reason why I mainly look at Biden as bearish is because of his tax policies, particularly capital gains. He's basically going to double capital gains. Not quite, but dramatic increase, a minimum of 40% increase in capital gains tax, 40% increase in corporate taxes. So those are both very bearish for the stock market. On the bull side, his trade policy won't be as antagonistic as Trump's. That's bullish for the stock market. And there'll be more stimulus probably. That's also more bullish for the stock market. But the tax policy is more important because that's a deep thing that affects everybody in a society. Stimulus comes and it goes. Trade policy is also bullish, but not as bullish as the tax policy is bearish. So I net it all out, and I say, I think Biden would be bearish, in which case we break these lows. And particularly, by the way, if the Senate goes Democratic as well, then we break these lows. If Trump wins, these lows hold, and we start to go back up again. So The break is whether we break or not is largely dependent on the election. And of course, will we know the results Tuesday night or Wednesday morning? We'll see. We'll see. All right, let's keep going. So the smart money, I think, is actually betting on a Trump victory. Okay? The market as a whole right now is saying, no, looks like Biden's going to win. That's what the polls say. So they're starting to dive down. And that's why I think we're selling off a lot in the last week is expectations of a Biden victory. Resumption of COVID, also not positive for the market. Let's go down here. I've mentioned the volume. Let's go down here. Now, these are stochastics. This is an awfully low level. Now, just because we get to a low level doesn't mean that the market can't keep going down. And in fact, when stochastics get to a low level and stay there, that's when the biggest bear markets occur. Let's take a look by analogy. Look at this. It gets to overbought and then it stays there for a month. Gets to overbought and stays there for 3 weeks. Gets to overbought, stays there for 3 weeks. So just because we're oversold doesn't mean the market's going to rally now. Okay? Now let's come down here. A lot of selling pressure. That's what the little red thing is. Not any buying pressure. But look at this. Look at this. This is the lowest buying pressure since May. I mean, really, I can tell you right now, since March and April, since the bear market. Selling pressure or the lack of buying pressure doesn't stay here for very long. And that argues that we're going to see a pop up. But the ADX, which I think is a far more important indicator than the red line and the green line, is going up, which tells us ADX is saying this is a legitimate bear market and that we should break these lows next week. So, what do? How do we trade this? We do nothing right now. We do nothing because we don't know if it's going to enter into a bear market because, quite frankly, we don't know what the election's going to be. And maybe I'll give a dissertation on how to predict elections later today or early next week. But quite frankly, I'm not that good at it. Or actually, the funny thing is that I'm better at it than I think I am, but I still fail. I know that sounds crazy, but I'll explain it if I do a video on my prediction for the election. But right now, what do we need to do? We need to watch this level, just above 3,200, very, very closely. If we break it, you got to get short. You got to like get short. You got to buy hedges. You got to do all the bearish things you need to do. If we turn around and get a nice big reversal day or something like that, you got to jump back on the bull side. So be quick with your movements, particularly after the election. All right, everybody, that's what I got for you. We'll see you on the next video.